Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look at the gold market. So as you can see on Friday, actually market has formed inside session, and everything that we have said in the video in the morning on Friday actually valid right now as well. So in the longer term perspective, if you will read our weekly report, you will see that the first trade that we talked about on the weekly chart is completed. So if you remember, we have two trading setups. First of all, on the weekly chart, this is large regardless triple to sell pattern, which is yet to be completed. And smaller pattern was the bread and butter buy. And actually, guys, this upward action was the bread and butter buy result. So by this retracement, market has completed the bread and butter trade because market has hit the 618 resistance. So minimal target of the bread and butter is completed. Now we stand at the point where we should get the clarity. So based on our analysis, we were watching for a second leg to the downside because we have the strong, significant target on the weekly chart. We have weekly overbought, large pattern, and finally on the daily we have the catalyst triple to sell. This is bearish pattern, bearish continuation pattern. And taking it all together, we suggest that another leg down should happen. This will be normal price action and reaction on the large important targets and resistance that stands on the weekly chart. Besides, if you'll take a look at the upward retracement, it was not very strong, it was gradual, not very fast, so it totally corresponds to the idea of the price action of retracement. This is how retracement should look like. So that being said, next week is the week of the bears because they have the passion in place and they start searching chance to go short. At the same time, we stand at the very important level because, guys, above this level, the bearish context will be cancelled. So if market will climb above this area and starts showing the upward continuation, it means that we're turning to the longer-term trend continuation, that no second leg of retracement will happen. We should not forget that on the weekly chart we have long-term bull trend, and this retracement is just a pause in this trend, and the pause could finish at any moment. So this is not something really solid. This is just reaction on the targets. Reaction could be longer term, classical reaction, or it could be surprisingly shorter term, and market could reestablish upward trend at any moment. We suggest that it should be in the way of the two legs, but it still has chance to be different, and we should be ready for that. And the 1322 area is a big assistance for us because while market stands below this level, it keeps chance on the two-leg downside action. Once it will break it and move above it, starting action back to the 1350 top, it will tell us that we stand at the upward trend continuation. That will be important. From that standpoint, this is the crucial level for the bearish setup, and the stops for the bearish trades should be placed above it. So that's particularly the action that we're watching for. It's 1260 destination point. So on the 4-hour time frame chart, there are a few details exist. So first of all, take a look that although the major setup mostly stands in place on a daily, we have some nuances, and these nuances tell that the upward action here is not totally completed yet. So for example, market has not quite reached the OP target of this ABCD pattern. Also, 1618 extension of the butterfly is not completed. So actually, we're discussed already this pattern that it could finalize the upward action right at the 1322. It's also the OP destination point. And finally, We also have mentioned on Thursday this grabber, this bullish pattern that suggests the taking out of this top, and this grabber is still valid. So that's why if you would like to take the short position here, you need to wait for a moment where this target will be completed, and only after that, certain chance to go short. For example, on the hourly chart, upward action could be finished by the minor butterfly that also could be formed here. As you can see, it has approximately the same targets, 127 extensions to 1325. And putting it all together, this whole price action could be treated as the three drive actually. First drive, butterfly, 127 extension creates second drive, drop, 127, that's very close of the second butterfly, coincides with the 1618 of the first butterfly, and they create the third drive. And also could be treated as a three drive pattern. So that's our point, for the bears, that should keep an eye on where the short position could be taken. If you have the long view, a bullish view on the market, you have the two choices. First of all, wait when the daily pattern will be completed, A, B, C, D, right in 1260, or another chance to go long if bearish setup will fail. So, for example, if market will jump above the 1325, erase the three drive, will continue upward action above the 618 resistance, that will be the signal that bull trend is reestablishing and no deeper retracement will happen. That's another signal that it's time to go long. That's particularly the moments and patterns that we'll keep an eye on the gold market on next week.